Wondering if you got to pay tax on dividends? Well, watch on. As a business accountant, my team and I spend all day long helping business owners on their journey. And as you can imagine, dividends is a massive deal. Whether you're a new owner or an experienced owner, you likely would have heard of dividends. And of course, the most common question around that is, well, do you actually pay tax on them? Because actually, if we go backwards in time, you effectively didn't pay tax on them up to a certain point, and I'm going to touch on that. But before I do, if you like these videos, make sure to click the bell and the subscribe button so you get notified whenever we release more videos just like this one. So then, dividends, the short answer is yes, usually you're going to end up paying some sort of tax on them. But before you just kill the video and move on, I do want to explain that in a bit of a longer term because I think it's quite important to see the bigger picture on this. But very quick history lesson in that many years ago, you effectively, what's known as the basic rate of tax, which is at the time of recording the video, something up to around the 50k level, under that, that's called the basic rate. And in the old days, it feels like the old days, wasn't that many years ago, you effectively used to pay no tax. They had like a tax credit system and dividends outside of that. So the company would pay you the dividends, and then you personally wouldn't really pay any tax on them. It was a fantastic system. They realized, I think the government, that actually it created a bit of a weird thing in that if you could pay yourself in that manner, you would be very much better off than somebody who was in employment. So they've tried to kind of align the systems through the use of this tax. So now what you have is you have an allowance called a dividend allowance that gives you some of it tax-free, and you also have your personal allowance. So most UK taxpayers will have around 12.5 grand a year at the time of recording, tax-free for their whole income. However, what happens with dividends is they get sort of stacked on top. So if you imagine your whole income is like a stack of books, so I'm going to show you an image in a minute of that, where you stack all your other income first and then lob your dividends on the top. And where that stack is depends on how much tax you're going to pay. So normally, if you've got another job, if you imagine that'd be the bottom of your stack, then your personal allowance, that 12.5k we're talking about roughly, would have already been used up. So you can't use that against your dividends. You might though still have this dividend allowance. And in the image it says there was a £2,000 dividend allowance. Now at the time of recording the video, that's actually now only £1,000, and the year after is going down to £500. So they're slowly cutting that away as well, but there is a little bit of dividends that you can have tax-free. And then the rest of it depends on the rates you're going to pay. So if we go back to that thing we called the basic rate, which is, let's just call it 50k for round numbers, but anything under 50,000. So if you imagine, if you stack your income up, so say you got a main job, or maybe you got some salary from your limited company, you put that in first, then you're going to stack any other income, and then you're going to stack your dividends. Any money between your other income and 50k is at the basic rate, and the dividend tax on that's just over 8%, so it's 8.75%. Then any dividends that fall between about 50k and about 125k are then taxed at 33.75%, and you can see those rates there. And then above that you can see it's nearly 40% that starts to hit you over 125k, so it does get pretty expensive later on. So there you go, that's the kind of tax rates you're going to pay. Before you disappear, you might be asking the question of, well, how do I pay that? How do I tell the revenue about it? When's that tax due? Because it's not like a job where you start getting it deducted every month and pay it over. And actually it's one of the more harder things I think for a limited company owner that wants to pay themselves in dividends to realise is you've got to kind of save for this personal tax bill as well on these dividends. And the way it works is you bung it all into your tax return. Because you've seen it's a stack of books type affair, you're going to need to bundle everything in to see what the actual tax rate you're going to pay is. And then what happens is you get a tax bill in your tax return. So you put all the details in your tax return, you get a bill in your tax return. And normally for most people, that tax is going to be due by the 31st of January, the year after your tax year ends. So if we're in the 23-24 tax year now, you're going to go all the way around, take all your dividends out to the 5th of April 24, then somewhere between the 6th of April 24 and the 31st of January 25, you're going to have to do a personal tax return, and that is normally when your tax on those dividends is going to be due. So as you can see, you'd actually have this money in your hands for a long time before you've got to pay any tax. So make sure you're aware of what that tax could be. And I suppose that's really the point of this video, is to highlight the fact that there is this tax bill, and I've given you some ideas of how you might be able to guess. Ultimately, if you're working with an accountant, hopefully you can talk to them about how you could save some money to one side to make sure you're covering that tax bill. So there you go. And as a final reminder, just make sure that those dividends are actually legal that we're talking about. So one of the biggest pitfalls we see is that those dividends can only be paid out of what they call retained earnings. So it's company profit, and then you've taken your tax off, and then there'll be a pot left. There's a way of working this out from the accounts, but ultimately you can only really pay out of that pot. And we see a lot where people have noted things in their accounts that these are dividends, And it's like, well, actually, if you look at it, they couldn't have been dividends legally. So just be wary of that. If that's something you're doing yourself, maybe you check in with your accountant. If you've got an accountant, maybe you're doing the bookkeeping, they're doing the year end or something like that, just check in with them, talk to them about it. And if you're doing your own, which is very rare with a limited company, just be aware of making sure that those dividends are okay. And actually, there's plenty of videos on the channel where we talk about dividend basics and things that go into that in a bit more detail. If you've enjoyed this video, please do share it with other people that need to know this information, and I'll see you in the next one.